What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you always, I am the bearded boy wonder, Dave Bartosiak. But today, my friends, it's a little bit different. We're having problems with the internet here. So what I've done is I have gone ahead and done this sort of standalone video, a little screen recording, and I'm just going to go ahead and upload it when I have the chance. Now, I've been going off of my phone's hotspot internet, so that's why we couldn't do our traditional style with the Skype and all that. It just was not working. So we're going to do it this way, and there we go. All right, so let's just go ahead and dig into it. Let's start by taking a look at this price consensus and EPS surprise chart on Zax.com. The black line corresponds with the right axis, which is price. The different arrows are earnings beats and misses. The multicolored lines represent the evolution of our Zax consensus estimates over time. And you'll see that throughout the course of 2013 and half of 2014, things were smooth sailing and there was growth at Oracle. Then in mid-2014, something happened, and now these estimates started to creep on down. The growth was still in there, but we really couldn't believe it because if you look from the 2014 number into 2015 number, it just got worse. Same situation, 2016, bottoming out, and then now they're saying, oh yeah, well, 2017, though, that's going to be where the growth is. But if you take a look at these earnings down here and just kind of draw, that's the cool part about this. You can just go straight across the screen, right? So what was down here in the 30s, now you can bring that all the way here to this sort of 26 level, or 2.6 level rather, okay? So because these lines corresponds with the left, right, the left y-axis, okay? So down here, 2.6-ish, and look where the price was last time earnings was that low. We have no idea even, right? Because the price was down here when earnings were all the way up here. So that's kind of on par with what we're talking about next year, but we don't have that. Yet the stock is still kind of crept higher. So go figure, okay? So keep that in consideration when you're coming up with this. Now, this is Zach's rank number 4, sell, value style score of C, growth of F, momentum of A for a VGM composite score of D. They're going to report after the bell on March 15th. So there's that. And let's see what else we got. So the bottom 42% of our Zach's industry rank, but they're in the top 31% of our Zach's sector rank. So that's weird. If you take a look at the revenues, 2.4% revenue growth for the current quarter, 0.2 for next quarter. Current year number just looks like 1.3. Next year's number is only 3.14. So I don't know, not a lot of growth there. Now, if you look at the actual EPS, year-over-year growth for the current quarter, negative 3.95% for the current quarter. Next quarter looks like negative 3.95%. Current year, negative 2.96. But next year, hey, next year is when it's going to get better. How many times have you heard that? How many different stocks have you seen this? Where the current year number is going to stink, the current quarter is going to stink, next quarter is going to stink. But next year, my friends, next year is when it's going to be awesome. I'm not buying it. And neither are the analysts. You got one analyst that has dropped their estimate for EPS for the current year over the course of the last 60 days. One has done so for next year. That's still not huge bearish behavior. Current quarter numbers have gone from 59 cents, 56 to 57. Next quarter, 76 to 73. Current year, 239 to 236. Next year, from 262 down to 257. So these are not huge moves in terms of magnitude, right? So you're not really all that scared about this because it's not a terrible, terrible move either way. If we look at the surprises, again, really tiny little misses, 4-cent miss, 1-cent miss, 1-cent miss. The company's been around for a very long time, and it's not like you're going to get huge misses or huge beats because they know, right? The CFO does a good job of managing expectations, and everybody's on the same page. Plus, it trades 18 times earnings, so there's not these huge growth, not a huge growth story right here. Let's go ahead and look at bar chart. I'm going to zoom this in a little bit for you folks so you can see. There we go. And I don't have my little EpiPen. Epic Pen. I keep saying EpiPen. We use it at the studio. It's called Epic Pen. That's funny. EpiPen, that's the epidural thing. So it's certainly not that. I'm not trying to, we don't need to bring you guys back from death. So let's start with looking at the front week. Now I got to bust out my handy dandy calculator though. Where's my calculator? There it is. Bring the calculator here on the screen, and let's go ahead and do that same sort of implied volatility calculation. Don't do the stack view, do the side-by-side, guys. It's much easier that way. And we take a look here. Again, I don't have my pen yet, folks, but the 42.50 call and put, that's the money. That's where we're going to look. So 87 by 88, we'll call it 88. And 78 by 79, we'll call it 79. And so that means kind of at the money, $1.67 is the straddle. Divide that by the strike price of 42.50, and you'll see that they're expecting about a 3.9% move in shares of Oracle. So they're not expecting a huge move, just that, $1.60 essentially, right? But where does that put us if the stock's here? So to the downside, that means 41, right, essentially. And to the upside, it's basically just a shade over 44, right? So 41 to 44 is sort of where we want to play. So this is the 41 down, and then 44. So it's pretty tight, right? It's pretty tight. Now, how does that correspond to what we've seen in the past? Maybe it's too tight, but remember, that's just one day after earnings or 2 days after earnings. So this is going to report after the bell tomorrow. So when I'm getting back to Chicago, settling down, hopefully I'll be at Portillo's getting a nice Italian beef. While I'm doing that, these guys are going to be reporting. So we've got that to look forward to. Now, again, they don't really always move that first day or first couple days, but look, post-earnings drift if I ever seen it, folks, right? Pretty much every time. Pretty much. Little chop city here, right? Lots of movement here, lots of movement there, lots of movement there, lots of movement there. I mean, lots of movement, okay? So I'm very comfortable putting on a call spread and a put spread or a put spread here if I'm a bullish guy, if I'm a bearish guy, right? All right, so let's go out to the April expiration. So this is the April monthly expiration. This is going to be the one with the most volume and, of course, does not disappoint. Now, remember, we said basically, 41s and 44s was kind of where we wanted to play. Not bad. This is not bad. Okay, let's do this. Go from the side-by-side back to the stack view. And remember, you always got to keep an eye on these guys because sometimes when you're messing around on bar chart, they don't give it to you proper, right? You get messed up. Okay, so we're not messed up. So that's a victory. So let's go ahead, if I'm bullish on this, long the 42s, right? Absolutely, long the at the money. And then selling the 44s as we were talking about. Now, you guys know I'm a big fan of selling these kind of halfway in betweens, okay, often. But with this, it's like they only think it's going to move 4%, and I think it's going to go more than that. So I think they're underpricing it really what's going to happen. So let's do the 42-44 call spread here on shares of Oracle. Bust out the handy-dandy calculator again. Of course, why am I closing the calculator? Calculator. There we go, folks. Okay, not going to close the calculator. 137 is the midpoint of the $42 call. This is April 21st expiration, folks. April 21st expiration. Long the $42 call for $1.37. Simultaneously short or sell to open the $44 call. You're going to get 44 cents back. Lots of fours. Four's wild, folks. So you got 92 cents as your overall outlay. Now that's the amount of money you're going to have at risk. The most money you can lose on this trade is 93 cents. Your break even is going to be 42.93, which is only 23 cents above where the stock is currently trading right now. So it doesn't even have to move much for you to break even. So that's a plus. Your maximum upside potential is going to be the difference in the strike prices, which is that $2 holler minus the 93 cents. That's 107, guys. So you can make 107 on 93. You're talking about 115% rate of return. What's got to happen for you to make that money? Shares of Oracle are going to have to trade at or above $44 at expiration on April 21st. So this is long 42, 44, April 21st call spread for a 93-cent net debit. That is the bull. That's the bull. That's the bull. Okay. Now, again, see, bar chart likes to just randomly. I think they do this because they're giving you the most updated price, right? But when you're putting this together, you got to look at this. And granted, I'm sure none of you are trading off a bar chart, and if you are, don't. You need to have real-time quotes, right? Or at least close, much closer. All right, so on the bearish side, it's going to be similar. We were talking in the other video, you know what, I'm going to go ahead and pull it up here for us, though. Internet Explorer and freestockcharts.com. I love using these guys. I've used them a lot. You can't use this in Chrome, and you can't use it in Edge either. You have to use Internet Explorer or Mozilla Firefox because it uses that Microsoft Silverlight plugin. So that old school kind of plug-in technology. Don't mind my pound dollar here. That's just some intraday stuff I've got going on, hoping for things to roll over. So let's go back to the dailies. No, we don't want pound dollar. We want ORCL. ORCL. We want the Oracle. And you'll see here, huge spike up. Not since election day, though, right? It's not a Donald Trump move. This is just something developing, probably chasing the NASDAQ here. The other thing to note is it leapfrogged the 50-day moving average, and it moved. Leapfrog and move. Under, dip. A little chop city here, leapfrog moved, right? But it has a tendency to kind of move below this and make a move or above this for a while, right? Which is good. However, recently, you've got this leapfrog of that level. Now it's kind of stalled out just shy of the 52-week high. The commodity channel index, I love doing this trade, right? It's not the crossover here. That's the first. This is actually the first buy signal that you have from the commodity channel index. I like trading that, but I also like this move. When it goes from overbought and just touches the zero line, I buy this again. That's one of my favorite trades. I do that a lot in Momentum Trader, and it works out. Now, that's not really happening here, though, because Oracle's dipped below the zero line. So that's a sell signal in the short term. Now, how low can that go? Let's use our good old friend, the Fibonacci retracement, and you can scale this out and see that 38.2% levels down at 41 and change. The 50%, though, is 40.80, which is very close to this 50-day moving average. That's a nice little target. That's sort of 40.80. So that puts us 41s would be totally clear of that. So 43.41, 43.41, decent trade here. Let's do the math. This is going to be relatively easy. $1.30. Let's just use the normal numbers. $1.30. If you go long the 43 put, if you sell the 41, you're going to get back 52 cents, right? So your total outlay on this is 78 cents. But the amount of money that you can make is the difference in the strike prices, which is $2 minus that 78 cents, my friends. So that means you got the potential for $1.22 on 78 cents. So you got potential for 156% rate of return on this because your outlay is only that 78 cents. Now your break even is $43 minus that 78 cents. So you're going to break even here at 42.22, and the stock is at what, 42.70 right now? So it's got to go a little bit, right? Now you're going to max out this trade if shares of Oracle trade at or below $41 at expiration. And remember, expiration on this, April 21st. So this is the bearish trade going long the April 21st 43.41 put spread for a net debit $78, okay? Long April 21st 43.41 put spread for a 78-cent net debit, all right? So that's the bearish side. We've got the bullish side, which was a call spread, the 42.44s. The bearish side was a put spread, the 43.41s. Which of these two do I think is going to work out? I don't have my sound effects, people, and I haven't quite figured out how to use this OBS software yet, but I'm going to figure it out anyway. It's the Bears, folks. It's the Bears. I think the Bears are going to eat here for Oracle. It is the Zacks rank number 4 sell, right? You don't want to mess with the rank. Plus, just look at this. All this just negativeness. So eventually that's got to work itself out too. So I think this is the quarter where it kind of catches up to them a little bit, and it'll sell off. Okay, so that's my trade here, guys. Going bearish on Oracle, the 43.41 put spread, April 21st for that 78-cent net debit. Let me know what you think. LiveTrader@Zacks.com. LiveTrader@Zacks.com. Shoot me those emails. Let me know if you took the bullish side, the bearish side, or in between. And again, guys, I apologize for having to do this video this way, but we had some technical difficulties, but I hope you still liked it. And I will be doing something on Thursday. Thank you for the recommendations. We're looking at probably Lennar on Thursday, and then maybe even an educational thing too, just because I feel bad for what happened today. So let's go ahead and do that, folks, and I will see you all in Chicago from the studio on Thursday. Have a good one.